Okay, we'll get going now. This is Anna Pinedo. I'm a partner at Mayer Brown. I'm joined by my partners, Remold and Patrick, who will introduce themselves and provide a little bit of background when they are speaking on their portion. And today we are joined by the team from Vestr. Again, they'll introduce themselves as they commence their slides. Our topic today is actively managed certificates and other actively managed products. So thank you very much for making time to join us today for our session. A couple of administrative things before we get started. For today's session, you're going to be on mute, but we do encourage you to participate by typing in questions throughout the presentation in the chat box. And all of us will do our best to answer as we go through the materials today. We have 1 hour. We're going to try and get through a fair bit. We will be sending around an email following today's presentation with the slides, as well as with a recording of today's presentation and some related information from Mayer Brown and from Vestr. If you're listening today for CLE credit, we will be announcing the CLE code once in the middle of the presentation, and we'll repeat it toward the end of the presentation. You should have received with the information for today's session the CLE affirmation code and certificate and other materials. So please just take note of the CLE code, include that in the material, and send that back to the Mayer Brown address that's listed there, and we'll process that and send back your CLE certificate. If you have any other questions on the process, feel free to type that into the chat box or email using the Mayer Brown email that's included in the CLE form. So with that, I am going to hand it off to Eli from Vestr, letting our guests get started on today's presentation. You see the agenda there for what we propose to cover, and we're going to dig right in with Vestr providing an overview on AMCs on the next slide, AMCs and the market. So off to Eli.
Yep, thank you so much, Anna. Hi, everyone. My name is Eli Tolan. I'm part of the business development team here at Vestr. Let's just dive right into AMCs and what they are. So next slide, please. So broadly speaking, AMCs are structured products, which are issued as debt securities, either by banks, could be security dealers or special purpose vehicles. They offer investors really a cost-effective way to access actively managed investment strategies, whereby you'll have an asset manager or a portfolio manager who actively selects and adjusts the underlying assets over time over the product life cycle to ensure that the strategy adapts either to the market or some predefined rules that you'll have in a term sheet, for example. AMCs can really include a wide range of assets from traditional securities to non-bankable ones like real estate, could be collectibles, digital assets, cryptocurrencies, and things of that nature. So in jurisdictions specifically like Switzerland, they are indeed classified as structured products, but otherwise have yet to have, let's say, a clear regulatory definition. However, we like to think of AMCs as really this bridge between an innovative investment strategy and accessible transferable securities. And if you look at AMCs again, because there isn't really this clear definition, very often we'll find other terms where there is quite a bit of overlap with AMCs. So if you look at the green box here on the right, you'll see other similar products or overlapping product definitions or terms like strategy notes, dynamic equity notes, exchange traded instruments, or even fractional bonds. So while these names can vary, they all really point back to the same core idea that these products are trying to provide, which is adaptable access to a diverse investment strategy. Next slide, please. So next slide as well. Yeah, perfect. So now let's really see, to shed a little bit more light of this overlap and see how AMCs really fit into this broader financial product landscape. We have this Venn diagram here that shows a bit of this overlap. So AMCs primarily fall into this debt category, as you can see, but they intersect with other exchange traded products. So when AMCs are listed, you can see that they are then classified as exchange traded notes. And a subset of AMCs as a whole could be eAMCs or electronic AMCs, which are tokenized versions of the certificate, and they bring in kind of blockchain technology into the mix a little bit. Then we have ETCs. These are exchange traded commodities, similar products, but they focus on commodities like gold or oil or other, and other types of subsets of ETNs, exchange traded notes, really. We also have this large bucket here, which is the exchange traded instrument. This encompasses really a broader range of exchange traded products and can include ETFs, which I'm sure a lot of you are familiar with, and also ETNs, exchange traded notes, and other derivatives. ETFs have really gained a lot of popularity in the last few years, especially. And these are legally classified, as I understand, as equity products, and they do indeed trade on exchanges, of course. So if we're going to move on, the next slide, please. If we want to see now kind of the market size to understand the scale of these instruments. So these are numbers taken from 2023. You can see that AMCs have about 1.2 trillion in AUMs, assets under management. A pretty significant figure for something that, for a product, a term that doesn't really have a lot of visibility in the market. And really, we've seen that number also grow quite a bit. Exchange traded products, which includes ETFs, has over 14 trillion in assets, which is really a testament to their dominance at the moment in the investment landscape. And then we have global futures and options markets, which have a combined trading volume of around 137 billion in contracts last year, with options showing rapid growth at over 108 billion contracts traded. So the open interest reach kind of a record level of 1.2 billion contracts, and that really highlights maybe a sustained investor engagement in the derivatives market. I think really what these numbers are showing here are the importance of structured products like AMCs and other exchange traded products in modern portfolios. And as a whole, AMCs in particular are increasingly becoming this really powerful tool for investors seeking flexibility and efficiency in their portfolios. And they really do combine professional management with access to a broad range of asset classes, both traditional and alternative. And whether it's for an institutional investor or maybe for an individual looking for some innovative solutions, AMCs really offers that flexibility and is increasingly becoming a more and more compelling option. I'm not sure if there's any questions just yet, but otherwise I would hand over to my colleague Stefan Wagner, who will go over what some of these AMCs actually looks like and how they're structured.
Thank you, Eli. So, I mean, there's sort of three typical formats that we see how investors can invest into an AMC and how they're structured. So the first one, what we call sort of is the on-balance sheet issuance. So often that is a bank who uses the normal debt program or structured product notes program to issue, in this case, an AMC, but in this case, to be very clear, the investor is only literally entitled to the synthetic form of a basket of an index of actively managed underlying. And so in that respect, the issuer is still the beneficial owner because they bought the underlyings to hedge the return on this. And in this case, very importantly, you got to remember that when you buy such a product, that you take the credit risk accordingly to the credit rating of the debt vehicle that was used for such a thing. And then multiple investors can invest in such a private product, and on the other hand, there is a portfolio advisor or index advisor, depending how it's set up, who can be an internal person of the asset management side or an external asset manager, who then decides what gets bought and sold and what he'll hold. Next slide, please. Another format that has been more and more popular, being heavily used, I would say, in some form in Europe, but also Latin America, what we have seen is where it's an off-balance sheet and where the issuance of the AMC is done via a special purpose vehicle. In Europe, many of them sit in Luxembourg, Ireland, Guernsey, Jersey, and stuff like this. Obviously, the vehicle then has a dedicated custody account, and in this custody account, the portfolio index advisor, again, the external asset manager transfer. In this case, obviously, there's different iterations of it, but some of them are set up particularly to ring fence these assets and make it basically the credit risk only the underlying assets. That's, for example, in Luxembourg, there's this concept of bankruptcy remote compartments. But on the other hand, obviously, such a product is not very well known, doesn't have a brand name like an on-balance sheet issuer, and it's often not only used for bankable assets, but also for non-bankable. You're probably seeing quite a few of them coming out as ETNs that are linked to crypto, but we even have products on the platform that have non-bankable assets like hotels, loan portfolios, even a portfolio of jumping horses or a Ferrari 250 GTO that has been fractionalized that way. So it's a bit more flexible, but also, as I said, it doesn't carry the brand name of the issuer with it. Next slide. And that is sort of often, I mean, there's one specific example, but this basically is an idea that's being used quite a bit either by SPVs or by on-balance sheet units, both ways. It can basically to remove the credit risk of the underlying issuer. You introduce in Luxembourg, it's a fiduciary note, or you use an independent custodian for that, who basically holds as a Swiss exchange, for example, offices, and basically where the underlying asset gets collateralized. And that way you can remove the credit risk of the underlying issuer. And we see this more and more, particularly when these products are listed on the exchanges as ETNs, or some people call them ETPs or ETP plus. And that is definitely a trend we see more and more, as particularly this product seems to be getting listed on exchanges. I mean, it's still in the overall, Eli mentioned a number of 1.2 trillion earlier. It's still a very small portion for it, but we see definitely a lot of movement, particularly in Europe, of that product not only being traded OTC between the paying agent and the bank, but also now exchange traded. And if you actually look a little B2B deeper, you will find them on platforms like Interactive Broker, where you can purchase them. Next slide, please. Okay, so there's a little bit of statistics. We already have in total nearly 20 issuers of AMCs on our platforms in all kinds of regions. But to be very clear, the regions that I mentioned up here are the ones where the issuer is located. It does not mean that's where the investor is or where the product is booked in the end or the external asset manager sits. This is just the issuer, in this case, the bank or the SPV. We have more than 1,600 users on it. And to give you an idea, and this is by product, not in AUMs, the statistic here. Any combination of stocks, ETFs, funds, options, structured products on equity pretty much represents nearly 85% of all products on our platform. That's often sort of a question we get because, many investment banks try to conduct that business, and the investment banks often still lives in their silos between equity and fixed income. So this is the part that the equity part can definitely do. Pure fixed income is usually quite small, or credit. So this is usually 6%, and then the rest, so 7.6%, I said, sort of non-bankable and crypto and something. And then it's nearly 50-50 by now. Where we distinguish between fund style and certificate style. Certificate style is basically like an index. It's just preset weights. If there's an inflow, any new cash will be distributed according to the current weights. While the fund style is, much more like a fund. Cash comes in, cash sits in a cash pocket. The asset manager then, at that point in time, has to decide what they want to do with it. It's now nearly 50-50, and all obviously the SPVs have only used Fundstar. Yeah, just put all the stats up on the right hand side, please. I don't know which order they're coming on. To give you a little bit of an idea, again, that really encourages us in a sense is that the average number of AMCs managed by one AIMX, the same external asset manager, 3, and often some more. I mean, the maximum we have is 48. And that's quite interesting, I think, to see, because once an asset manager has realized how flexible such the AMC solution is, they literally become I call them a repeat offender. Usually we have 27 or more underlyings in it. We even have one with 390 underlyings it. But I think the other one interesting one is sort of the average size on off balance sheet is 11.7, but actually the median is 2.3. That tells you how heavily skewed some of our stats is. I mean, we have one individual one that's close to 2 billion in size, but then there's, as you can tell, many small one. Same thing applies for the on balance sheet, which is also, average size is small, but then there's some really, really significant sizes that again go close to the billion size. Next, please. Trends, yeah, just keep on going. We see a lot of index technology now, particularly in Europe, trying to use AI. So, that becomes a more and more distinction in a sense between active and passive. I mentioned, if you go into Ireland or Luxembourg, for example, securitization business that under which SPVs there fall is usually unregulated, but there's more and more regulated SPV coming out, and they get listed on exchanges like the LSE, the Irish vehicle, for example, or Milan and Euwax, a lot of the Luxembourg vehicle. What is definitely also new is that the off-balance sheet being used vehicles in for securitization in Asia. We didn't see that probably 2 years ago. And the product range in the sense being extended in the sense that it's often sometimes not only delivered as an AMC anymore, the actively managed strategy, but also as a total return swap. So that's one way. The quantitative investment providers are more and more using AMCs to either deliver the strategy or making their strategies basically available as Delta One investment inside an AMC. Definitely happening more and more, and the new markets for us are definitely that are growing and then more and more. Italy, Spain, UK, in particular South Africa. But there, on one hand, is if you want to list on the Johannesburg Stock Exchange, so far only banks can do this. Latin America and South Africa, there's also tax considerations why people seem to do it, and also because it seems to be easier, particularly in South Africa, for investors to buy securities than actually funds. Then the other one we see Sharia compliant AMCs coming out of the Middle East being used for that one, and definitely tokenized AMCs. Lots of people are working on solutions on there. No real market standard has developed there. How you use distributed ledger technology, how you deal with a KYC and AMC, but a lot of people are looking at it and trying to find a way, and that's the trends. Thank you. Next. Oh, there's also something with the automation. Can you just hit one more? Yeah. Oh, here we go. I don't know what somebody. Okay, so this is a little bit of what I always advise, and that's my personal advice, is to be very clear when you're trying to look at if you're trying to look for somebody to help you launching an AMC and you're looking at the issue, what you might want to look at is definitely I always advise, have a look at the track record. Have they done similar to what you already want to do? Do they have any experience? If you want to go into crypto, non-bankable or high frequency trading, whatever it might be, whatever your strategy is. Definitely, what is the credit risk? And then very important, how robust is their technology infrastructure? Not only from the regulatory data security side, but also we have seen this, in fast moving markets. If you don't have a good infrastructure, and you have originally the agreement, you just send your orders in by a Bloomberg chat, you suddenly in fast moving markets will very quickly get forgotten and nothing will trade for you, or too late when you actually want to trade. So make sure there's a proper thing there. Exactly. What is transparency? And fees and reporting and everything else. Can you get this? And also, obviously, look all the way into the terms and conditions of the issuance process. The fees, particularly, is there anybody from the issue or from an external market maker? Is there a liquidity provider? The redemption terms, and that would be it. Thank you. Next one. I think I'm handing over to somebody, Mayor Brown.
Yeah, I think it's me. Hello, everyone. I think my name is Patrick Scholl. I'm a capital markets partner of Mayor Brown here in Frankfurt, and I will now lead you a bit through the European perspectives of AMC, in particular from a regulatory perspective. And as I'm the first lawyer now on this call, I will also dig into some of the legal elements of an AMC. But most of what is relevant from legal perspective is already mentioned by the colleagues from vestr. So well done so far. Next slide, please. So we look a bit differently on AMC because for us it's first of all a bond, a structured debt instrument that was already mentioned. And what is a specific on the AMC? It's just the naming that follows from our view, the economic orientation of the instrument in the sense of a synthetic linkage to a portfolio that is compared to other structured products not static. It's managed, so it's subject to adjustment by what we call now for the purposes here a manager. So the AMCs are issued under a wide range of jurisdiction. Yeah, so there's no necessary application of a one specific law. The most relevant laws at this point in time is likely Swiss law, but you can also issue AMCs under German law or any other law in the European Union or English law. That's in principle all possible. So no limitations on that basis if you are structuring a European product. My US colleagues will come back on the US side after my presentation. From a legal perspective, as already mentioned, there's no standardized legal structure. So the main difference between the AMCs when issued as bonds relate to how the structure of the underlying as such. So is it an index? Is it a repackaging, or is it a fiduciary solution where more or less the portfolio will be represented? Next slide, please. Pretty much all of the AMCs that are issued by financial institution, they are usually being issued by making a reference to an index solution to implement the management structure in the structured product. This means you have an index-linked product in our terms, a very special index. It is possible, or it's just been described, to use structured special purpose vehicle. In that case, the management is carried out on behalf of the SPV issuer, and the management can be directly or indirectly. So directly means that the vehicle invests directly in the underlying components, or indirectly, again, synthetic via derivatives, for example, options, future, total return swaps, with other hedging counterparty. This investment is then usually be done by the manager. You can also call them investment advisor or whatever. From the payment profile, the product is quite simple. It's usually a Delta One product where one euro gain will be directly more or less reside in of the portfolio, directly reside in a 1 euro gain on the product, and vice versa. So this is from the payment payout structure a comparably simple product. But, and this is the decisive fact here for the purposes of my regulatory discussion, AMC are exposed to a risk of total loss of the underlying portfolio. This means that they are subject to stricter regulations. And as just mentioned, the more the AMCs become more popular and we see more issuance in the European Union, you can also be aware, it's also clear that the national competent authorities, the supervisory authorities, become more aware of the product and might look a bit deeper into the market. That's why it's really important to have a really a thoughtful approach in terms of structuring the AMCs from a contractual perspective, keeping the regulatory risks in mind. So next slide, please. So the special features of the AMCs and the complexities and the legal issues arise out of the management rights of the manager. Yeah, so as a general rule, there are usually only limited provisions and determinations for the manager. There's a high degree of flexibility in terms of his decisions. This is different to many equity indices you are used to, where there is a strict rule-based adjustment or allocation principle in that index. In an AMC, usually there's a more degree of flexibility in terms of investment decisions and the timing in investment decisions, reallocations, and potentially also on the kind of assets. From a legal perspective, therefore, the aspects of transparency on the one hand side for the investors, but also the question of avoidance of conflicts of interest are the predetermined aspects that we look into from when we analyze AMC structures. And there are associated risks of negative consequences for the investors that play a fundamental role if there's a transparency issue and investors finally try to object to certain investments that might resulted in loss. So this is always important to keep in mind. The more flexibility on the manager is in the instruments, the question is how do you cater for that flexibility in terms of transparency in order to have not in the end a kind of a black box investment. In particular, how can the company avoid from a liability and regulatory perspective that investors or supervisory authorities could complain about investor exploitations with regards to the wide scope of action? I think that is the decisive legal question that you should always keep in mind when structuring a product. And what are the safeguards or the incentives to take into account to avoid such suspicion on the products? Next slide. I know this sounds very cautious, but I think it's important that giving the opportunities that are subject to this instrument, you should take into account these potential disadvantages in terms of the legal risks, and then it's a good thing to then talk about how you can overcome these issues and make the product, despite of its economic positive elements, a product that can survive complaints. In terms of documentation, AMCs are generally offered as part of an offering program. There's usually an offering document, possibly a regulated prospectus, in particular, as it just has been mentioned, when there is a regulated, for example, SPV or a listing on a regulated market, you likely need a prospectus regulation compliant prospectus. We see little public offers on these instruments, but in case a public offer would be envisaged, then also in the European Union, an approved prospectus pursuant to the prospectus regulation is required. In other documentation are usually term sheets, short form disclosure documents if there's not a prospectus requirement, and most importantly, if there's any kind of retail investors involved in the European Union, a regulatory PRIPS kit document has to be prepared. And with respect to the other program-related documents, you see program dealer agreements. If an SPV is used, you see various agreements with service providers. And if there's a collateralization structure involved, for example, for exchange-traded notes, you see collateral agreements and maybe trade agreements like swap agreements. And depending on the AMC structure, there's a kind of a management arrangement with the manager or the index provider. And if there's an index, there are also then documents regarding the license and research agreements related to the agreements. Next slide, please. So next, I want to give you a brief summary of the legal aspects that you really have to keep in mind when structuring or issuing or distributing an AMCs. First of all, I already mentioned the issuer structure. I mentioned the prospectus regulation requirements. Please check whether you do public offers. It's really important that you're on the safe side. PRIPS regulation, preparation of a kit can be an issue for this product. So you might need a service provider that can do the calculations for you for the purposes of preparing the kit. And from a license requirement, the issue likely doesn't need a license. Depending on the jurisdiction, there are so many jurisdictions usually involved in AMCs. Yeah, it's nevertheless quite important that you do a final check on potential license requirements on the side of the issuer. But normally, if just issuing a debt instrument, this should not be subject to a license requirement. But the manager or the investment advisor, they could be likely subject to a license requirement. So it's really important you check the license status of the parties involved regarding the management of the underlying portfolio. Next slide. A very important part is the product governance regime under MiFID in MiFID II in Europe. And interestingly, just last year, the AMF started to look into that market and created some recommendations that I copied into these slides, and please take them as a quite important first note from one of the regulators here, because it's harmonized European laws. Not all regulators have the same view, but at least it gives you some ideas what regulators could think about the product. First of all, regarding the target market, the AMF makes a clear recommendation that this target market should be positive. It should be positive in a way that it only relates to clients with the highest level of knowledge and experience. And they also suggest of placing clients with low level of knowledge and experience in a negative target market. You don't need always a negative target market and for the product governance requirements, but in that case, it was interesting to see that the AFM recommends to use a negative target market. One important aspect of the AMF recommendation was the provision of information. I always touch that topic, and the AMF was really a bit, let me say, unclear. Saw the problem of investors not having adequate information about the portfolio at the point in time when they invested in the portfolio. So the AMF therefore saw a risk that investors could not have the sufficient information at the point in time they invest, and therefore they recommend that there's a clear system of transparency and information provision to potential investors, and they make also reference to what should be the content of this information package that has to be served. And one, not surprisingly, element of that information package were the number of costs, the costs involved in the AMC. So here, transparency in terms of costs, the underlying assets, the number and volume of anticipated annual rebalancing obligations, so how actively managed is the product, and all related costs also to the rebalancing is important for AMC to be made available to the investors. And they really look on precise information. Also on the asset side, there are quite clear recommendations. I highlighted this in the boxes here, in particular on the eligibility criteria, the components of the AMC, and the date of statements of reports. Reporting was seen as very important for the AMF, that is clear at what point in time reporting will occur and how investors can access the reporting. Next slide. Under the product governance rule, over the aspects of suitability and appropriateness test play an important aspect. So once you distribute the documents, AMF records that professionals are required to assess the client's level of knowledge and experience with regard to this specific characteristic of the financial instrument. As it is not static, like other structured products, I think the test on the knowledge and experience must also be on this active management perspective of the instrument. And the AMF also points out that this assessment should not only be performed by means of the self-assessment carried out by the client themselves, in order to ensure that the client truly understands how the AMCs work. So the EMF really is concerned that the client in the end doesn't know what he is investing in. So please take care that there's sufficient information about the product idea to the investor to avoid that risk, that it will be distributed to investors that are not suitable that is not a suitable investment for a certain investor. And finally, just to name it, it happens rarely, but there's a product intervention right from national competent authorities in Europe in case they think that an instrument is totally not in the interest of investors, and in particular, if retail investors are targeted, please be aware that there is a product intervention right in Europe. With that, I'm done with my European part, and oh no, I have this slide. Sorry, I overlooked this. So if there's an index,
Patrick, I think we're really short on time.
Okay,
I think
yeah.
we're gonna have to move on, and
Yeah.
Remote, I think we're just gonna skip the US. So the next part, I'll just refer you to, has a number of considerations and discussions on securities law issues for wrappers in terms of offering on a 144A or other visas to US persons, but as Ramot will discuss, there are some significant tax concerns. So most often, AMCs are sold in reliance on Reg S to non-US persons, sold to US dealers, and sold through the US to US dealers as a conduit, for example, to try and reach the Latin American market, just by way of example. With that, just in the interest of time, otherwise we're going to run out. We'll skip forward to tax, which is the most important issue that comes up when folks are considering introducing these in the US. So Remo, why don't you take it from there?
Okay, thank you. And yeah, just let me know if I had some audio trouble here, but I think this is working.
Yeah.
So okay, great. So the main tax point to explain, and maybe the next slide would be helpful to show, is a pair of IRS notices that was issued in 2015 and then put into proposed regulations last year. And let me just describe the kind of the transaction or the events that led to those notices, because I think understanding that will be helpful in kind of understanding what these notices are getting at. So a well-known hedge fund, successful hedge fund, investing in equities, trading, let's say, relatively frequently, so is giving their investors short-term capital gains. Short-term capital gains are taxed at ordinary income rates and not at the preferential long-term capital gain rates. And so the hedge fund came up with a strategy or a structure, and what they did is they said to a counterparty bank, write me an option. So fund will buy an option from you. The option is linked to a basket of equities. The hedge fund could trade the basket of options, or the basket of equities, I should say. And so they were obviously successful in their trading strategy. So the basket would go up in value, and then after more than a year, when the option was terminated and it paid out the higher value, the fund took the position that that was long-term capital gain for tax purposes, and therefore entitled to the lower tax rate, the preferential tax rate. And so the IRS did not like that transaction at all, and that's what these notices are doing. They're identifying these basket option contracts as listed transactions and substantially similar transactions as transactions of interest. And there are now also proposed regulations. So let's just go through on the next slide what that means, but I think the history kind of informs what these notices are getting at. So contracts based on the performance of a reference basket are going to be captured if, and there's a few requirements here. So the taxpayer enters into the contract. That can be a variety of contracts. It can be, an option. It can be a swap. It can be a forward contract, any type of derivative, essentially. It's a contract that entered into with the counterparty. and the taxpayer is entitled to receive a return based on some type of underlying. The contract is more than a year or spans at least 2 taxable years of the taxpayer. The taxpayer, or more likely in AMCs or other transactions, are the designee has exercised discretion to make changes. And then finally, that the tax return has to reflect a benefit. So typically, it's the one that I mentioned earlier, which is short-term capital gain or ordinary income is being turned into long-term gain. So on the next slide, the question then becomes, well, what's a designee? And so the designee is a taxpayer's agent under like agency law principles, or somebody who's either compensated or selected by the taxpayer to suggest, request, or determine changes in assets in the reference basket or the trading algorithm. So that's typically the prongs that we worry about the most in these type of transactions. Exceptions to designees are, there's two bullets you see on the slide there. The first one is somebody's position as an investment advisor, officer, employee of an entity, when those entities are when the entity has publicly traded securities that are included in the reference basket. So the example there would be like a mutual fund or ETF. And then the other exception is basically for indices, and then this is where there's some challenge, because the language says it's about an index that is widely used and publicly quoted, and that's based on objective financial information, or it's going to be an index that tracks a broad market or a market segment. So not a lot of clarity on exactly what that means. I think people feel comfortable that, let's say the S&P 500 is not included, but, once you get into, less widely used indices, the question then just becomes, what is widely used? What is a broad market or a market segment? So there's unfortunately some uncertainty there without any further guidance. On the next slide, we talk about discretion. So what is discretion, and what are the exceptions to discretion? So discretion basically means the right to change assets in the basket or make changes in the trading algorithm. Exceptions are basically objective rules. So if you have an objective set of rules or an algorithm, we call it basically a rules-based index or a rules-based basket, then that is not viewed as discretion. Exercising routine judgment in administrating the rules is not considered to be discretion. Correcting errors is not considered discretion. And finally, making changes to take into account unanticipated events that are outside of the control is not considered discretion. So the examples in the notices and the regulations are stock split or a merger, listing, insolvency, etc. So there's a few other exceptions on the next slide. Those are instruments that are treated as debt for tax purposes. So if you have a contract that is essentially principal protected for U.S. tax purposes, and that's debt for tax. If you have debt, you typically don't get the long-term capital gain benefits, and therefore the notices don't apply. If the contract is traded on a national securities exchange, then also not captured by the notices. And then finally, if the taxpayer is not U.S. or doesn't have a U.S. tax benefit, then those wouldn't apply either, which can either be established or determined through like a statement or through collecting tax forms. So then on the next slide, what if there are no exceptions? What if you are captured by these rules? Then who has to do the reporting? And so participants to a transaction are required to report, and material advisors. And then the participants is the taxpayer, the counterparty, so typically the issuer of the instrument. There's some special rules for a taxpayer that is a partnership for tax purposes. And then material advisors would be, typically like the law firms that are involved in the transaction. The reporting on the next slide is done through particular IRS forms, separate forms for participants and material advisors. And then, the consequences of failing to disclose these transactions to the IRS, are range from penalties to extended statute of limitations. So that's the main challenge on the U.S. tax side with products where essentially there's a discretionary element in the upside of the arrangement. And then the second point I wanted to highlight on the tax side is obviously for any type of financial instrument, financial transaction, you gotta identify kind of what the tax characterization is. Is it equity? Is it debt? Is it is it a notional principal contract like a swap? Is it some kind of derivative that we don't know what the treatment is? If it is equity, then the point to make here is that if it's equity, then the PFIC provisions should be taken into account for AMCs. And so because a PFIC is any non-US corporation, so PFIC stands for a passive foreign investment company, if it meets one of two tests. There's an income test, there's an asset test. So if 75% or more of the income is passive income, or 50% or more of the assets are generate passive income, then in any particular year, then the entity is a PFIC. And if the entity is a PFIC, then a U.S. shareholder does not benefit from preferential rate on long-term capital gain. And if there is gain or there's a distribution, it gets allocated among the holders' holding period. It's taxed at the highest possible ordinary income rate, and there's an interest rate charge, kind of as if the income was earned over the entire holding period. There are mitigating elections available. There's a mark-to-market election if the instrument is traded, and there's a qualified electing fund election, which essentially makes the holder pick up income on like a modified pass-through basis, essentially. So I wanted to highlight that the PFIC considerations, and it's just as part of the general analysis of what an instrument is for U.S. tax purposes. So those were the two topics on the tax side, and with that, I think I hand it off to Simon for the next segment.
Thank you. Let me share my screen quickly. I'm going to give you just a very quick little demo of the AMC platform that we offer to our clients, just to visualize also some of the points that have been discussed previously. So what you see here is basically the login that the asset manager would see when they log in to the platform. So they see the different products that they manage. And then if they click on one of the products, it will show them the current composition, right? So even though it's index linked and the index might look like an opaque object from the outside, the platform always knows exactly what is currently in the index. And even more so, it also knows the historic composition of the index at any point in time. So this example product here, this example AMC, invests into a bunch of stocks, as you can see here, but it's a cross-asset AMC, so it also has some bond investments, structured products, funds, options, even indices and other non-bankable assets such as student debt or cryptocurrencies, or here we even have a jumping horse to one of the examples earlier that we heard earlier already. We keep track of all the changes on the product. So for example, if you would click on any of the positions here, Apple, it would show you exactly how the position came about, right? So you would see all the past transactions and how they affected the index weight at that point in time, and which prices were used, which FX rates were used, etc. And even more than that, we have this version history, where you could travel to literally any point in time. So let's say November 6th as an example, and the platform can instantly recreate the index composition for you as of that date, right? So you can recreate the product, you can regenerate reports, recalculate NAVs as of any point in time. Another example of sort of a compliance-related feature would be that you can define these investment rules, right? We talked a lot about discretionary rebalancing versus rule-based rebalancings, and the platform offers you a wide set of tools to monitor that the investment manager actually sticks to the predefined rules that have been defined, for example, in the legal documents. So here you see just some examples of possible rules, right? These investment rules could be based on which asset classes a specific AMC is allowed to invest into, or if there are some constraints on the liquidity of the underlying instruments, or on the sector of the instruments that are invested into. Or here we have rules, on the number of bond investments that a particular AMC can do, or diversification rules. In this case, it says you should not have more than 4% invested into a single stock, into a given stock, etc. And so these rules are monitored by the platform pre-trade, post-trade, continuously, and you can set them up with different severity levels. And in case there is a breach, everyone is notified. And you can also block clients from enter trades that would potentially violate these rules. There's also a whole set of reporting tools. I'm just gonna maybe show this screen very, very quickly, where clients can access a real-time report in a fully customizable way. So they can change all the colors, they can change all the charts, all the data that they want to display, and really drill deep into the index, into the AMC, group it by currency, by asset classes, by country, look at all the historical underwater curves, volatilities, heat map, etc. All of this is available at any time at the disposal of the client. And then the very last point I would want to show quickly is how they can enter a rebalancing. So again, this is to the point of the discretionary rebalancing, where clients could log in and change the composition of the index at any time. We've heard from Patrick Scholl that it's important to link it to an index, right? So this is here an index-linked product. And it's actually even possible to link multiple different AMCs to the same index, right? Like you would know it from the fund space, where sometimes you have an institutional tranche and you have a retail tranche, and they both invest into the same underlying basket. You can do the exact same thing with AMCs. So we have an e-commerce index, but on top of the index, you actually have two different products. You have two different AMCs. In this case, we have a retail tranche or retail class with a certain denomination, a certain fee structure, a certain currency, but we also have an institutional class with lower fees and a higher denomination, maybe in a different currency, sometimes with FX hedge overlays, etc. So this can all be configured, and then when the client rebalances, they only rebalance the underlying index. And just to sort of show a very simple example, they could, for example, add Tesla to the mix and then invest 10% of the assets to Tesla and maybe deduct it from the Alibaba investment that they already have. And then the platform will give you all the tools to sort of seamless enter these trades, and also the trading instructions. The platform would calculate what the total hedge order would be, considering all the different classes that are out there that are linked to the same index. And then we would send it straight either to the market directly or into the bank's internal system so that they can take it from there. Right, back to you, Anna.
Great. Thank you. On the last few slides, some resources for you. As I mentioned at the beginning of today's presentation, we had a couple of questions on this in the chat. We will be sending out a recording and the materials, as well as some additional links containing some reference materials for all of you. We didn't get to some of the questions. We took note of them, so we will be responding as follow-ups to the questions that were posed during today's presentation. With that, we conclude today's session. Thank you very much for joining us. We appreciate it. And thank you very much to our presenters at Vestr. Thanks for joining us today.
Thank you.
Thank you, everyone. Yep. Have a great day.
Bye.